Good morning, viewers out there. Today, I'm going to respond to my viewers' questions about the wealth building video, okay? How to become a millionaire or how to become wealthy, okay? The reason I didn't make a video answering you for a while because my parents just passed away within 6 months of last year and this year, so I was suffering, I was sad, so I didn't have time. And today I have some cancellations, so I think it's a good time to respond to you, okay? Many of you email me, talk to me on the phone, and also comments on my video, okay? Of how to um, how to get started, okay? So there's three most important questions I will answer. Most of you ask the same question, and these are the three most common questions asked by you viewers, okay? One is how to get it started. Two is, whether you should be in individual stock or a fund managed by some kind of managers. Okay, and third is what kind of life you want to live in, how much money you want to live in, how do you achieve that goal. Okay, so today I'm gonna answer you in as best as I can. Okay, I would start with the question about whether you should be in the individual stocks or managed funds. Okay, and I will talk to you about the pros and cons of these funds. Okay, if you have a lot of experience and you had a lot of knowledge about investing or the stock market, how the stock market works. Okay, and how to analyze it, you should be into the you should go with the individual stock. Okay, the individual stock, let me tell you, the reward is higher, the risk is higher, of course. Okay, and the advantage is if you buy the individual stock, you can customize, pick only the companies that you want. So you don't have to pick many, you don't have to pick unwanted companies into the portfolio. Okay, so you custom pick, you pick about 8 or 9. I think that's an average. Okay, custom portfolio of the individual stocks. Okay, that way you get all the stock only you want it and you think they will do well. Okay, the advantage is that you can pick all the stock you want only. You don't have to go with somebody's pick that you think is not going to do well. Okay, the advantage for individual stock, but the risk is higher. Those, because of the roller coaster, you have a chance to make more, but you have also have a chance to lose more money on individual stock. So the disadvantage is that you can lose more money by buying individual stock because you're not that diversified. Okay, you only pick like certain stocks in a portfolio, so the chance of down is very big, the chance up is very big. But I say you're in the right place. You're in the right place. You can make a lot of money by individual stocks if you have experience. For example, like people who work in Microsoft, Apple's, and NVIDIA's and other information technology stock in the last 15 years. These people become millionaires. Okay. Now let me talk about the mutual fund, index fund, and ETF. That means exchange trade fund. Okay, there's three of these available, managed by a manager. Okay, if you don't have experience, you don't have much knowledge about investing, or you don't want to take that much risk, I think you're better off with these managed funds. Okay, they can do just as well, but the advantage if you go to the managed fund is that you're more diversified. So in case the market go down or crash, you don't lose as much as individual stocks. Okay, uh, but the disadvantage is the return is little less than individual stock because the manager invests in so many companies. Like these mutual funds, they can invest in up to 500, 1,000 companies in their portfolio. So you getting some of the company that you don't want. Okay, and the disadvantage is you cannot pick, and you have to go along with the manager's pick, and you have to go what he wants. And sometimes you don't want the companies that he buys into the portfolio. So that is the disadvantage. Okay, but the advantage is that it's more diversified. In case you had a market downturn, you lose less money, okay, than individual stock. Okay, and you have a manager manage for you. You just pay a small fee. Okay, and they'll do all the trading, the analysis. When it's time to sell, they'll sell. When it's time to buy, they'll buy. And you sit on side, do nothing, okay? Of all these three, between the mutual fund, the index fund, and the ETF, exchange trade fund, I think I like the exchange trade fund the most, okay? Because it works just like individual stocks on this fund, okay? You had a manager, manage for you. He trades every day in the stock markets, okay? So you don't have to do anything. He'll make the money for you. So he trades every day. So you pay a small fee. And I found out, like the E-Trade, the exchange trade fund, they exist 20 years ago, okay? So I found out that I like this one the most, okay? And you have every sectors in there. You can pick a health sector, energy sector, high tech sector, information sector, computer sector, real estate, bonds, everything. You can choose what area you like, and you can do research and whether you can take more risk. You're still young, you want to be on the aggressive sector, or you're nearing retirement and you want to be safe, and you want to be you don't want to lose a lot of money by the end, so you can still have money for retirement. There's many areas, many sectors, so you can pick, what is your age, what kind of tolerance you can take it, okay? I would say if you're still young, okay, you have time and you start early, you stay in the high risk area, okay? Over long term, you'll make money, okay? If you look at the real estate market, the stock market in the last 100 years, it goes up and down, goes up and down, goes up and down. But by the end, it always go through the roof, okay? So investment is for a long term, okay? And don't panic when you have market downturn or market crash. Don't panic. That is the best time to buy, okay? Buy low, sell high as investor. Uh, I would say a lot of you ask whether you should invest in a lump sum or dollar cost averaging, okay? I would say most of us don't have a lot of money, so I would recommend you invest in dollar cost averaging, okay? Put money into the account, okay, to the account you want, and you can put there over a long time, and you'll get the average price, okay? That's called dollar cost averaging. You buy average price, so it's not too high, it's not too low. You buy average price, okay? But if you had a lot of experience, a lot of money on the side, you can wait for the economic downturn. You time the market, okay? And you time the market when the economy hit the bottom. You buy all the mutual fund or the stocks, and in a couple of years it goes up. It's gonna go up, like I told you. So by then you can double or triple already. So it doesn't take much to make a lot of money. So if you have talent, you're good, you know how to invest, and you know how to time the market, I would say this is a good idea, okay? But a lot of us don't have experience. So I would say to be safe, you put money monthly into the account, okay? You'll be better off in the long term. You're not gonna buy too expensive, not gonna too cheap, okay? You buy average price, okay? But for me, I've been doing this since 1992, okay? So I have experience. I have ups and downs. I learn where to invest, when to invest, how to avoid, risk, and how to be in a safe fund, or how to make more money. When I was young, I was very aggressive, but now I'm nearing retire. I kind of put more my money on a safer account. For example, a lot of these index funds, okay? There's no there's no wrong going with the index fund. When you're near retirement, these are the safest area, okay? I look at this index fund the last 15, 20 years. Some of these index funds, they generate like 12, 13% annually. So there's no wrong going with the index fund when you're near retirement. It's safer, okay? So I would say when you're still young, you go with a very aggressive portfolio. But as you get older, you want to have money when you retire. You don't want to lose all the money. So you go with a safer fund, okay? You go with some of the safer sector. For example, a lot of these mutual fund, index fund, they're very safe. And of course, you're going to have up and down, okay? But if they all over a long time, it's going to go up, If you look at the last 100 years, the real estate market, the stock market is going through the roof. Okay, so I would say when you are investing, stay in there for the long haul. Don't panic when the market go down. Okay, like I told you before, that is the best time to invest. Okay, if you know how. Okay, that's how you make a lot of money. That's why these big investors, these smart investors like Warren Buffett's, these are well-known investors, they want the market crash because they can put more money and then buy and then double. Okay, so um, actually market crash is good for a lot of people. They want the market to be crashed so they can buy more funds, more stocks. Okay, and the third question is how to get it started. Okay, how to get it started. I would say get it started as early as you want, because most of us only have 40, 45 years of time to make money. And I say by the time you're 50, if you don't have money, it's going to be difficult to build wealth already, because time is not on your side. It takes a long time to build wealth. Okay, so you must start early. Some people say when you should start. You start as early as possible. Okay, Warren Buffett, he started investing when he was 11 years old. Can you tell? And I look a lot. I read his autobiography, and this guy is amazing. If you don't know anything, you just pick up the stock that Warren Buffett picked. You do well. Okay. So I would say just follow some of these talents. Okay, you do well too. But getting back to how to get it started. Okay, you start as early as possible. Like I told my children, I already set up when they were born. I set up account for them. I put money in there, but I told them that you have to contribute into your account. By the time you retire, you're a millionaire. So you start as early as possible, because time is not on your side for us. By the time we're 65, we're retiring, and that time we need money. Okay, we don't have money. If by the age 50, if you don't have a lot of money, time is not on your side. Time is not on your side anymore. So it's going to be difficult to build wealth. Okay, and I make I look at the people in the United States here. Some people ask me, how do I, how much do I want to make? What kind of lifestyle do I want to live after I retire? If you look at the people in the United States, I found that there are four distinct classes. Okay, the bottom, the second, the third, the fourth. There are four distinct classes. You can classify as many classes as you want, but I would say there are four distinct classes, in my opinion. Okay, the first class is the bottom one. These people are people who are on welfare, high school dropout. They live under the poverty level. Okay, these are the poorest people in the United States. Okay, the bottom classes. And then you have the middle class, which is the second class. Okay, these people are college graduate. They're working for somebody. They're working paycheck by paycheck. They own very small business. Okay, and these people, I found that the majority of people in the United States are in this class. Okay, working for somebody. These people are the hardest worker. These are the one who built America, but they're not the richest. Okay, the hardest worker. Because if you live paycheck by paycheck, it's gonna be difficult to build wealth. Okay, unless you're a good saver, you dedicate yourself that I'm gonna put some money on the side regardless, and say when I retire I can be a millionaire. Okay, so it's very difficult for these people to say and to become wealthy, because you're working somebody, you don't get enough pay, you are poor, you have children, you have to pay their college education, you have to pay healthcare, you have to pay for all these. And I found out this group is the largest group. This group is not doing well, but they're the hardest worker. They're the workers who built America. Okay, so I will talk about all these groups, all these classes, and see which class you want to belong to. Okay, and then the third classes is, they call them upper middle class. These people are made up doctors, lawyers, self-employed employees, companies, you know, medium-sized companies owner. These people typically make about $250,000 to $1 million. So you say these are the upper middle class people, okay? And Then you have the four classes, the top of the food chain, the wealthiest. Okay, the 5% of these people own 90% of the wealth in the United States. I did research and I found out these are the wealthiest people in the United States. If you want to belong to this class, the four class, the top of the food chain, I look at these people and they are made of real estate investors, stock market investors, big companies, owners, manufacturing, high tech companies. So these are the richest people in the United States. And these people compose about 5% Americans, but they own 95% of the wealth in the United States here. So let me just tell you these four classes, and now you know what you want to belong to, what class you want to belong to, okay? So to be wealthy, to make money, to create wealth, you must have the same goal. Like you go to school, you must have a goal that you want to be a physician, to be a dentist, to be a lawyer, to be a nurse, to be a chiropractor, something like this. So same thing. When you want to build wealth, you had to have a goal. You had to determine what kind of living do you want to have. How much money I want to retire with, okay, when I retire. So same thing, you must have a goal, okay? But you must start early, because the earlier you start, the better. Like I told you, we only had like 45 years of times to make money. By then we are old, we don't have much money, we are ready to retire. So you have to start early, okay? And you have to be in the fund. And most of the time, if you're in the fund, for example, like mutual fund, stock index fund, or exchange trade fund, you don't take out your money. You let the money accumulate. You reinvest the dividend, the capital gains. Okay, don't take the money out. Let them accumulate. They'll accumulate faster. You won't take your wealth or your money out until you retire. Okay. For example, if you want to retire with $100,000 per month, I look at this index fund. Very easily. You put money in index fund, you can easily get 11-12% annual return each year. Okay. So if you want to, by the time you retire, you want to have $100,000 for living expense per month, per year. Then you put $1 million. You have to have $1 million in the fund, okay? Because it generates, 10, 11, 12% annually, okay? But if you want to retire with $200,000 per year, you have to put $2 million in the fund. You want to retire with $300,000, you had to put $3 million. Make sure you have $3 million in the fund. You had $4 million in fund. You can have $400,000 expense. You can get the money, $400,000. And I'm talking about just the dividends and capital gains, okay? You don't take out the principal. Let the money in there accumulate for you. You can live off the principal, okay? By this time, you live comfortably if you had that kind of money in the bank or in the investment, okay? So I found out, these trade fund, sometimes if you look at these ETF fund, some of these I was investing in the last 20 years. You can easily generate 15 to 20% annual return. Okay, so if you're good at it, if you do your homework, you study, and you know where to go in and what kind of risk you want to take, whether you want to be aggressive or less aggressive, you can. If you are aggressive, like I did when I was in my early 30s, you can be in a aggressive portfolio or trade fund, and some of these funds you can generate 15-20% annual return. So I think they're very, very good fund. Not as much as individual stock, but they're safer, they're more diversified. And I would say a lot of us don't have the experience. I think it's safer for us to stay with the mutual fund, the index fund, or the ETF fund, okay? If you had a lot of experience, you're very talented, you know the markets, how the market works, and you know how to trade your stock, when how to buy, what kind of stock you want to pick, then you go with the individual stocks, okay? And I would say that's how I got started. And I hope this answered your question, okay? And I would say don't panic, when the market goes down, okay? If you look at the market, the stock market in the last 100 years, it goes up and down, goes up and down, but at the end it goes through the roof. Okay, so I would say investment, stay for the long haul. Don't panic. When you had market crash or market downturn, that is the best time to buy. Okay, to buy, but you must know how, and make sure you in a right place. Okay, buy a good fund, do a lot of research. Okay, so you don't lose money. Okay, and uh, I would say if you follow my direction, you'll do well. Okay. Like I told you, I'm not a professional investor, but through my experience, I've been investing since 1992, so I have good experience. I was in the individual stock market. I was all involved, all kinds of fun. Okay, all kinds of funds and stocks and markets and stuff like that. So I know, and I did well. Okay, so I hope you're listening, and I hope you do like this. Okay, uh, but uh, but you but it's not something that I guarantee you're gonna do well. Okay, some people will lose money, some people will make some money, but if you lose money, um, make sure you learn from it and don't make that kind of mistake again. Okay, I made a lot of mistakes when I first started. I guess everyone, including Warren Buffett and other investors like him, because it's very difficult to predict the stock markets, and you just have to learn from your mistake and be patient, and make sure you don't make that kind of mistake again. Okay, so I hope you take my words for it, and I hope you do well. Okay, and I thank you for listening. I'm Pase Lor. The reason I'm speaking English because I have viewers from different ethnic backgrounds, like Mexicans, Laotian, Americans, and other ethnic background. Okay, so that's why I don't speak in Hmong. And I thank for listening. If you have any question, email me or call my cell phone. I'll discuss with you for a longer time. Okay, thank you. Bye bye.